Hey, it's John McCabe. Welcome to the show. Hey, and welcome to the John A. McCabe Show, where it's all about accelerating your authority in your business or field of expertise. And we do that by helping entrepreneurs, business owners, authors, experts, and speakers get seen, get heard, get noticed on any device, anywhere, anytime, in as little as 15 hours, also known as the Authority Acceleration Blueprint. Now, on today's show, Real Estate Investing Mondays, I have a great lesson lined up for you. Now, today I'm going to be discussing foreclosures. Now, the show is for homeowners who may be facing foreclosure or real estate investors who want to understand more about the foreclosure process so they can position themselves as the go-to person that's there to help solve the homeowner's problem and get paid very well for doing so. You know what they say, the bigger the problem, the more you get paid for solving it. Now, when it comes to foreclosures, each country, state, province has their own way of dealing with them. Today, I'm going to be discussing how they're dealt with in Canada, and hopefully in an upcoming episode, I'll have the opportunity to discuss how they're actually dealt in the U.S. Now, the key for any homeowner when it comes to being faced with foreclosure is that they really need to understand that there's actually only one way to put a stop to the process. Now, during today's show, I'll share with you what that one and only thing is that puts an end to the foreclosure. Also share the two types of foreclosure in Canada, the difference between the two, the stages of each type, the 5 biggest mistakes homeowners make, and the different strategies that you can use as either a homeowner or investor to stop the foreclosure on the home. Now, foreclosure can be a very stressful time for any homeowner. In most cases, they aren't really educated when it comes to the process, the stages, how to stop it, how it works, options open to them, and the mistakes that so many other homeowners make time after time again. Now, in today's show, I'm going to discuss each of those things more in detail so that you have a better understanding about foreclosure, how you can prevent it for yourself or for somebody else, and how you can profit from stopping the foreclosure at the same time. Now, remember, if you're an investor and helping someone ease their problems or solve the problems, then there's nothing wrong with you getting compensated. So stick with me. I'll be back just after this short transition, and we'll get right into foreclosures in Canada. Hey guys, and thanks for joining me today. If you're a homeowner, full-time or part-time real estate investor, brand new or veteran, then today's show is for you. Now, as a real estate investor myself, I've spent more time than I care to think about sitting at the kitchen table of a homeowner who is facing one of the biggest stressful times of their life when they're facing foreclosure. Now, sometimes I can help the homeowner, but there have been many times when I cannot because they just let the process go too long and there just wasn't anything that I could do in the short amount of time that we had before the courts took over their home. Now, there are other times when the homeowner just refuses to see the reality of the situation and holds out hope that they're going to win the lottery or that this is all going to go away. Now, sadly, I've been called back by some of the homeowners just before the bank takes over the home asking me for help again. And if my offer still stands. Unfortunately, because of their delay, I'm unable to help them in the remaining time that's left. Now, in today's show, I'm going to be going through the information all homeowners, investors needs to know when it comes to foreclosures and how to stop foreclosures. The key for any homeowner when it comes to being faced with foreclosure is that they need to understand that there's actually only one way to put a stop to the foreclosure process. Now, during today's show, I'm going to share with you what that one and only thing is that puts an end to the foreclosure. I'm going to talk about the two types of foreclosure in Canada, the difference between the two types, the stages for each type, the 5 biggest mistakes that homeowners make, and the different strategies that you can use as a homeowner or investor to stop the foreclosure process on your home. Now, the first thing I'm going to cover today is the 2 different types of foreclosures here in Canada and what the differences between the two are. So the 2 types that we have here in Canada are called the judicial sale, and we also have the power of sale. Now, there's 4 main differences when it comes to these 2 types of processes. Now, the first difference is the extent of the court involvement in the first major difference. Now, in judicial sale provinces, the court is extensively involved in the entire process. For example, ordering the property to be sold, they confirm the sale, sale procedure, and hearing any application for a deficiency judgment. Now, in contrast to this, there's virtually no court involvement in the power of sale provinces. Can you guess which system is quicker? Just give you a hint. It's the one without the actual court's involvement, because we all know courts and lawyers tend to muck things up and take forever. So when it comes to the quickness of the process, the power of sale is definitely much quicker. And I'm going to discuss that a little bit further when I talk to you about the stages and how long each stage actually takes. So the second thing is the instigation of the proceedings. Now, the way in which foreclosure process is started in the power of sale provinces is simply by way of sending a notice to the borrower and current owner of the property. This notice starts the process. Now, in contrast, the judicial sale provinces start the process by way of a lawsuit against the borrower and all who may be liable. And this is typically called the statement of claim, which is what starts the actual process. Now, when it comes to the cost of these proceedings, it's much more costly to do the judicial sale than it is the power of sale. Now, the third reason is, the third difference rather, is the method used to seek a deficiency judgment. Now, in judicial sale provinces, the deficiency judgment action is started as part of the main action, or suing of the borrower via the initial lawsuit. Now, in a power of sale provinces, a lender seeking a deficiency judgment must start an action against the borrower after the property has been sold. So even if you lose your house, if there isn't enough equity to cover all the costs, you still may lose your shirt as well. Now, all the more reason to do whatever you can prior to this actually taking place, or do whatever you can to avoid the foreclosure like the plague. So for all homeowners or all real estate investors dealing with people that are going into foreclosure, definitely it's a huge incentive to them to actually take action. And even in the judicial sale process, it's not the lender that actually sues the person, but if the mortgage is actually CMHC or insured through Genworth, CMHC, any of those insurers, it's the insurance company that will actually sue the homeowner if there is a deficiency judgment as well. So just to clarify that. And the fourth difference between the two are the time frames. Now, the judicial sale process usually can take up to 6 months or so before it's all over. I've seen some go even longer. I've seen redemption periods of 6 months, and I've seen them take upwards of 12 months for the whole process to complete. It really, a lot of times it'll depend on the amount of equity that's in the home. In contrast, the power of sale foreclosure, particularly in Ontario, can be over in only 45 days from the time that the notice has been given. So you can see that there's quite the contrast between the two different processes when it comes to foreclosure in Canada. Now I'm just going to discuss a little bit about the judicial sale process. How that works is a lawsuit must be initiated against all liable parties to start the process, and the court is involved in every step of the way. Now, the provinces that are involved in the judicial sale process include Alberta, BC, Manitoba, Saskatchewan, Quebec, and Nova Scotia. Now, there's six main there's six main stages of the process when it comes to the judicial sale process. Now, the first one is stage one is when the bank issues a statement of claim. That's the legal document that's prepared down at the courthouse and sent out to the homeowner. Now, this is typically after you've missed at least 3 payments on your mortgage, and it's questionable as to your ability to service and finance the financing of your home. So this usually takes place after you've missed 3 payments. The lawyer representing the bank will actually file down at the courthouse what's called a statement of claim, and that starts the action of the foreclosure process. Now, stage 2 is the statement of claim must be served to the owner of the home. Now, the owner has a 15-day period to file a statement of defense. Now, if this is not filed, then the next stage will commence, And stage 3 is when the bank requests in the statement of claim that the court order the home to be sold. Now, the range of time granted by the court is really depending upon the amount of equity in the home and can vary from 1 day to 1 year. The most common redemption period is typically 6 months or less. That's what I see a lot. But it really, as I mentioned, it really depends on the amount of equity. If someone bought a home with 5% down, you add in the CMHC fee. So if they've owned the home for less than 5 years, there's really not a lot of equity there. So the court may have a shorter redemption period than if you've owned the home for 20 years and you have, more than 50% loan to value. Then the bank is a lot more giving you a lot more time when it comes to the redemption period to actually fix to handle the arrears and all the fees that go along with the arrears. So stage 4 is the next stage, and that's when the bank must file the order for sale of the property. This must be accompanied with a property evaluation from an appraisal company. Now, in addition, this step will outline more specifically the dates of the redemption period and how the property is to be sold either by the court tender process or via the MLS at the appraised value. Now, one thing to remember in Canada in these judicial state provinces is the court is obligated to sell the home as close to fair market value as possible. So once a home is actually foreclosed on, and it's a foreclosure home on the MLS, it's the court is obligated to get as close to fair market value of the home as possible, keeping the value of the homes up for the realtors and the real estate board. So you really don't get those huge discounts that you hear about down in the U.S., where you can buy a property for pennies on the dollar at through the foreclosure process, through the judicial sale process once it's actually been foreclosed upon. Okay, so that's the stage 4. Stage 5 is the order of sale must be served to the owner of the home. So these are the stages. This is the process of how this actually all transpires in the judicial sale provinces. And the 6th stage is if the redemption period passes without the owners having the financial capability to pay the arrears, then the home will be sold. Okay, so those are the 6 stages for the judicial sale provinces. So if you're in a home, or somebody is in a home, is going through the foreclosure process in one of those judicial sale provinces, these are the different stages that they're going to be faced with. To give you an idea of the time frames, especially for investors, what's most important is prior to the statement of claim being filed, typically you have up to 90 to 100 days. So from the time you miss your first bank payment, remember you can miss up to 3 bank payments. So if you're on a weekly schedule for your bank payments, for your mortgage payments, once you miss that 3rd week's payment, then they start the process. Now, if you're on a monthly payment schedule, once you miss the 3rd monthly payment, then they start the process. So it varies depending upon what your payment cycle is for your mortgage, whether you're weekly, bi-weekly, semi-monthly, or monthly. So obviously, if you're monthly, it gives you a lot more time to take action prior to the statement of claim. If you're weekly, within 3 weeks, if you miss 3 weeks worth of payments, then the court's actually going to take action. So typically it's after 3 missed payments, not 3 months. So prior to the statement of claim, that can typically be up to 90 to 100 days. Now, after the statement of claim and before the redemption period, that time frame, it really is dependent upon the courts, what the judge has to say, how long they give you for a redemption period, but can typically be anywhere from between the 90 days to 6 to 9 months time frame. So the first 90 days before they file a statement of claim. So after the 90 days, basically you've got a 6 to 9 month window there before the end of the redemption period. And at the end of the redemption period, that's when the bank actually takes over the title. That time frame is usually in around the 6 to 12 month time frame from the time that you've actually started the process. So For investors, obviously the best stage for you to be concerned with is the very first one prior to the statement of claim being filed. For homeowners, that's going to be the cheapest stage for you as well to come up with the money to pay out the arrears and all the associated fees. One thing to keep in mind, and a lot of homeowners don't realize this, is they may miss a payment and then they go and they make the next month's payment. Well, what they think they're doing is they're making that month's payment, but in reality, they're actually paying the previous month. So they just because they paid the money for the second month, that money actually goes to pay the month that they missed, not that second month. So in actuality, now they've missed two payments. They missed the first one, they missed the second one, but they gave the money during the second month, which actually paid the first one back. So if they miss another one, that's 3 missed payments in a row. So which means that they're still in arrears. There's still payments that are in arrears and fees are accumulating. So they've not actually caught it up to date. So that's something to remember and keep in mind when it comes to sort of trying to get, as a homeowner, trying to get out of this situation. Now, profit potential, if you're a real estate investor, profit potential and the time frames for dealing with the homeowners facing foreclosure in the judicial sale. So prior to the statement of claim being filed, so that's within the first 75 to 90 days, if they just missed a couple of payments at the bank, maybe they just received the notice from the bank as to, the demand notice, catch up your payments, before we take further action, which is filing for foreclosure. This is the place where, as a real estate investor, you have the highest profit potential. And it's the least amount of competition because really nobody knows that the homeowner is going through this process. So it's not registered anywhere in the courts yet. The only people that actually know are the homeowners themselves. And typically they're not out telling everybody that they're in this situation. So what they'll do is a lot of times they'll actually start their searching online to find out how they can fix the problem, how they can fix the situation, because they don't want the home to get foreclosed on. So they're doing all kinds of things, and we'll talk about a little bit later on, we'll talk about the 5 biggest mistakes that they're making. Generally at this point in time when they're stressed out, they don't want to, they don't want the lender to actually start the foreclosure process. So there's a lot of emotion, there's a lot of things, and there's a lot of mistakes that they're actually making. Now the second most profitable time frame is prior to the final notice of the foreclosure, which is typically the 6 to 9 months. This is when prior to the end of the redemption period. Now it's possible to make a profit, depends on the amount of equity in the home, and there's a lot more competition because it's now public record. Once that foreclosure gets filed down at the courthouse and the statement of claim gets filed rather, now it's public record. Now I know in Alberta there's people that search the court filings every day. They're looking for people that are going into foreclosure or being foreclosed upon, and they're creating a list, and then they're selling that list to other investors, letting them know, making them aware of who's actually going into foreclosure, so that the investors can then start seeking them out, start sending them marketing information, trying to get the homeowner to connect with them to actually try to help them through the process, because it's an ideal opportunity for an investor to make some money, do a deal, take over a home, whatever the scenario is. Now the third time frame is the foreclosure itself. This is when the owner is no longer in control. This is when the home is actually on the MLS system. So it's by auction or sealed bids through courts, and typically there's a lot of competition. And like I mentioned before, that it's the court is obligated to try to get as close to fair market value as possible based on the MLS system. So bottom line, the homeowner or investor, you really need to take action and make a decision early in the process, and try to get, if you're an investor, try to get the homeowner to contact you early in the process using your marketing material, using stuff online, because typically the homeowner will start their search online for a solution to their problem. So being there, being the person that's positioned to provide them a solution for their problem is key when it comes to getting in front of the homeowner prior to it being public knowledge. So the process gets started by sending a notification to the owner of the property. Now, the court has no involvement in the process. Under the power of sale clause, the lender can sell the property without any formal legal action to if the homeowner defaults. Now, the provinces that participate in the power of sale process include New Brunswick, Newfoundland and Labrador, PEI, and Ontario. Now, the stages of the power of sale include the default must be at least 15 days, so 15 days with default in the payments. Now, the owner must be notified in writing of the bank's intention to exercise the right of the power of sale. Now, the owner is then given 35 days from notice to pay up all the overdue payments. Now, if it's not paid, the lender sues for possession. Now, once possession is transferred, the property can legally be sold under the power of sale. Now, if the purchaser of the property under the power of sale gets clear title, if the proceeds don't cover the debt owned, the owner can be sued for the difference. And the entire process usually takes between 90 to 120 days, usually. So you can see the difference between the power of sale time frames and the judicial sale time frames. So there's a big difference. It's much quicker in the power of sale provinces. It's a lot less expensive in the power of sale provinces. In the judicial sale provinces, it can drag out for an entire year. It can be very costly because there's court time, court costs. You have legal costs involved because lawyers for the bank are involved. It's a crazy process, the judicial sale. Power of sale, much cleaner, much quicker when it comes to taking over the property. So when it comes to the profit potential for an investor, for example, so prior to the homeowner being notified in writing, this is the point in time that the investor has the highest potential for profit and the least amount of competition. So again, it boils down to typically these homeowners aren't running around telling people that they're missing payments or they're going to be notified or they think they're going to be notified in writing. This is the point in time where homeowners may be searching online for a solution to their problem. So it's really understanding the problems of the homeowner and being able to craft a solution or craft some copy that you can use online that is going to resonate with the homeowner and offer them a solution to their problems and get them to connect with you. So potentially you can go in and make an offer on their home or go through the process and explain to them what's going to take place and that they need to pay their arrears quickly. So the next second best time frame for profit potential is prior to the expiry of the 30-day period to pay the arrears. There's still a high potential for profit, but there's more competition because now this is public knowledge that they've been notified in writing, so there's more investors involved. There's more investors that know about this. So you still have a high potential for profit, but the competition has increased. Now the next one is prior to the lender suing for possession, because it's possible to still make a profit, and it really depends on the amount of equity. And the more there's definitely more competition since, again, it's still public record. And the final one is possession has been transferred. Now this is the owner is no longer in control. So here there's lots of competition. This is where they're selling it on the MLS or the open market or judicial sale. Sorry, not judicial sale, but an auction. I actually attended one of these in Nova Scotia when I was home in Nova Scotia several years ago. I was actually bidding on a property that was going into foreclosure. I tried to negotiate with the homeowner, and she just didn't understand the process. She didn't believe what I was saying. So I made her a great offer. She didn't want to accept it, or she accepted it, but she didn't want to let me in the house to look at the condition. So we withdrew the offer. So I decided to go to the courthouse to actually put a bid on the property and try to win it through the auction. And the auction went pretty quick, and it was, I was trying to keep it below what my offer had been, but very quickly the price got rang up by the other bidders, and there's only 3 or 4 of us actually at the auction bidding on the property, but within no time there was a lawyer representing some other investor was there, and he got the winning bid, and he bid more than the actual lenders. So the lender is there, has a representative there actually at these proceedings to make sure that the home goes for at least the amount owing on the mortgage. So the bank will bid it up until the mortgage, the point of the mortgage, to try to get the other bidders to bid higher than what's actually owed on the mortgage. Sometimes the bank ends up with a property. Other times the other investors or the other people that are there are willing to bid more than what the bank has bid. So that is about the power of sale process. Now, just as with the judicial process, the homeowner or investor need to take quick action as soon as possible to prevent the foreclosure process. So when it comes to stopping foreclosure, so let me see what my next slide is. There we go. So when it actually comes to stopping the foreclosure, there's actually only one way that can be done. A lot of people think that there's a lot of different things that will stop the foreclosure process, but actually there's only one thing. Once the foreclosure process starts, there's only one thing that will actually stop the process, and that is paying out the arrears and all the outstanding fees associated with the foreclosure. So nothing else will do it. There's nothing else that will actually stop the foreclosure but paying out what the lender has requested. So that's typically the outstanding fees and all the outstanding arrears. So it really depends on how long you've been in the foreclosure process as to how much that's actually going to be. Now, there's a lot of different strategies an investor or homeowner can use to pay that, or to come up with the money, or to exit their home, or whatever they're looking to do. But bottom line is they all involve paying out the arrears and the fees. Nothing else works. So I know that I've seen a lot of investors marketing to homeowners, saying that there's many solutions. Actually, there's only one way to stop the foreclosures. There's a lot of different strategies that you can use to come up with that money. But in actuality, there's only one way to stop it, and that is to pay out the arrears and pay out the fees. So so pay out the arrears that need to be paid out. Now, the earlier in the foreclosure stage that the homeowner contacts you, if you're an investor, the less money that actually needs to be paid back. So the homeowners need to be aware of this at the time. That really time is of the essence. So if they're served with a foreclosure notice or a statement of claim, then time is literally of the essence, and they really need to be aware of that, which a lot of homeowners they're not aware of. They think they have all the time in the world, and the next thing they know, they're losing their home, they're getting kicked out, and basically they're going to have to pay the bank any deficiencies. So it's very important that homeowners understand this, and that they actually make a decisive action, make a decision very quickly, and act extremely quickly. Make that decisive decision and act quickly. It's really all that they can do in order to save off the foreclosure. Because as I mentioned, a lot of them will actually sort of wish that they're going to win the lottery, or things are all going to be better, or they bury their head in the sand and this is actually just going to go away. And in reality, that's not what happens. So the earlier the foreclosure stage, they need to contribute the less money that needs to be paid back. So homeowners need to be aware the time is of the essence. Now, there's things that a homeowner can do. Remember, there's only one thing that's going to stop the foreclosure process, and that's to pay out the arrears and the fees. So what can a homeowner do to pay out the arrears and the fees? Well, they can get an equity loan to cover all the arrears, fees, etc., and budget for some future payments of the home. Now, this can only be done if they actually have enough equity to get sort of refinancing, and provided that their credit isn't shot because they've been missing payments for other things. So in Canada, if you owe more than 85% loan to value, typically you're not going to be able to get refinancing, or you have to go for a second mortgage or a third mortgage, depends on how many you have on it. And then at that point in time, it really is going to depend on the lender and the fees and how much the interest rate is going to be, whether you have enough equity in there. So it can actually be quite costly. So anyone that's actually bought their home within the last 5 years, with maybe only 5% down, typically they're not going to have enough equity in their home to be able to get a second mortgage. They definitely don't have enough equity in there to refinance, because you're only allowed to refinance up to 85% right now. Typically, there may be some exceptions, but typically it's most lenders are looking at an 85% loan to value in order to refinance. So that takes us to the next thing. So homeowners may have to go and borrow money from family or friends. And in doing so, they would want to sign a promissory note, or maybe the lender, their family or friend member, is going to ask them to sign a mortgage, which gets registered against the title, so that they actually can, so that they actually have some. The word escapes me. Collateral. So they actually have collateral. If you're borrowing from family and friends, I definitely recommend that you actually get stuff in writing and register it against something with collateral. So that's a way that the homeowner can get the money to pay out the arrears and the fees. So either they can get a home equity mortgage, maybe a second mortgage or third mortgage if there's enough equity in the home. A second way to do it is they can borrow money from a family member or a friend, or they can call Andy Lockwood, because he's got lots of money. And just kidding. Well, he does have lots of money, but you can find a private lender that it will actually, they'll register a promissory note against the home, or they'll get you to sign a mortgage for the amount of money. You can then take the money, pay out the arrears, pay out the fees, get that all caught up to date, and then you've just saved yourself from foreclosure. Now, a lot of times I advise people that there's typically a reason why you're into foreclosure. So just collecting that much money may not solve. It'll solve the immediate problem, but it's not going to solve the long-term problem as to what got you into that situation to begin with. So you may want to actually look at either downsizing, getting out of the home, getting into something a lot less costly, or some other scenario, because a lot of times it's just a short-term solution. Coming up with money to fix the foreclosure problem is typically just a short-term solution, because a lot of these people have bigger problems than just missing the payments on their home. A lot of them, they have they're not sure how to handle their finances, and they can get themselves in the same situation in the very near future again. So now the next thing they could do is they could actually sell their home as quickly as possible. So if they've missed some payments, the foreclosure start, they really need to sell their home as quickly as possible, because the money from the sale, the proceeds, will go and pay out the mortgage. It'll pay out the arrears, it'll pay out the fees, and it'll pay out the mortgage. So remember, that one thing of the only way to stop the foreclosure process is to pay out the arrears and the fees. Well, this is another strategy. You can sell the home and use the proceeds to pay out the mortgage, the arrears, and the fees. So that's an easy way to get out of the home. Now, a lot of times you may not have the luxury of listing it with a realtor, waiting, for typically if it's priced right, it might sit on the market for around up to 60 days, and it's usually another 45 to 60 days for it to close. So that's up to 120 days. You may not have enough time to let it go that long. So you're looking to sell the home as quick as possible. Usually that's by selling it to an investor or somebody that can close very quickly. A lot of times they're already pre-approved. A lot of times they might just buy with cash. You may not get as much as you wanted by selling it to, you know, an end user, selling it retail, so to speak. But by waiting for that time frame, you're missing more payments, more fees are accumulating, and you're going to end up losing a lot more money from the sale because you waited that long. So at the end of the day, it may be worthwhile taking less if they can close in, you know, 7, 14, 28 days, if they can close very quickly, versus holding out for more money and waiting for that traditional sale to actually go through. So another strategy that you could use is the homeowner could actually lease option their home, making sure that they get enough from the initial option payment or down payment to cover all their outstanding arrears and fees. So in layman's terms, basically lease optioning your home means that you turn your home into a rent to own. Now, typically when a rent to own, a person comes in, they have to have a down payment. And with the rent to own, if you're going to turn your home into a rent to own, you want to make sure that the down payment amount is going to cover all the arrears and the outstanding fees so that you get it caught up to date. Remember, there's only one way to stop the foreclosure, and that's to pay out the arrears and the fees. So you're going to do that by taking a down payment from a person that wants to rent to own the home. It's called an initial option consideration. You're going to take that money, you're going to pay out all the arrears, all the fees, so now your mortgage is caught up to date, and that person is going to move in, and they're actually going to rent to own the home from you. So over whatever the time frame, 2-3 years typically, and at the end of the time frame, they're going to buy the home. So during that time frame, you know, you still own the property, they're still making the payments, you've obviously moved on somewhere else, you're living somewhere else, but potentially you could be making a little bit of cash flow every single month. And at the end of the term, if they do not qualify to buy that home or they back out at any time, you still have the ownership of your home, and you still have your home. So once they either default on exercising their option, or they choose not to exercise their option, and you get the home back, you can then sell it at that point in time, or you can move back in. So the choice is yours. But once you enter into a rent to own with these people, once they lease option your home, then they have the first right of refusal. They're the only ones during that time frame that can actually buy the property. You cannot get out of the arrangement for any reason. So the only way that you're going to get the home back is if these people do not exercise their option in the time frame that you've given them. So it's a very specialized situation. Typically, it's not something that a regular homeowner is going to do by themselves. They would need to seek out qualified or expert advice from individuals in order to turn their home into a lease option. So going to a company like my company, for example, I Offer Solutions, is we actually do on a consultation basis, on a consulting basis, we'll actually set up lease options for homeowners that want to actually turn their home into a rent to own. So that's another option, but at the end of the day, still the only way that they're stopping the foreclosure is they're using that down payment money to pay out the arrears and to pay out the fees. So the next thing a homeowner could do, another strategy, is to do nothing. So by doing nothing, obviously the fees and that are going to continue to grow. The homeowner may just stay in the home and decide that they're going to ride this thing out and not pay any money. And by doing so, they're going to lose all the equity that they probably have in their home, unless they have an extremely large amount, which they may end up getting some back. But they're also at risk of being sued after the home is sold for any deficiency. They're either going to be sued by the lender if they're in a power of sale province, or they're going to be sued by the insurer like Genworth or CMHC if they're in a judicial sale province and the property is insured by one of those insurance companies. So that's another option that the homeowner could do, is actually they could do nothing and lose the home, lose their credit for 7 years, not be able to buy a home for 7 years, and lose any money or any equity that they actually have built up in the home. So when it comes to stopping the foreclosure, the one and only thing that can be done is, as I mentioned many times, is pay out the arrears and all the fees. Now, how you do that can vary, as I just talked about, different strategies, how you actually come up with the money to pay out the arrears and the fees. And that's typically where an investor can come in and help the homeowner, because Typically, they understand the different strategies. They know how to structure this to actually pay out the arrears, whether it be a straight purchase, whether it be a lease option, whether it be providing private money to the homeowner to pay out those arrears, which gets registered as a mortgage. Typically, the investor will have a lot of different strategies that they could help the homeowner in solving their foreclosure problem, which is basically paying out the arrears and all the fees. So as I mentioned, the earlier that you address this issue in the stages of the foreclosure, the less money the homeowner or investor will have to come up with, which makes it a lot easier to solve the problem when you don't have to come up with as much money. Now, as the owner, you have a very short window of time to stop the foreclosure. As I previously discussed in the stages of foreclosures, the time frame that you have to stop the foreclosure is very limited. And there's really, I've narrowed it down to the 5 big mistakes that homeowners end up making over and over and over that either cost them time, money, or eventually their home. So I'm going to talk about these 5 different mistakes that homeowners will make on a consistent, persistent basis, time after time after time, meeting homeowners at their kitchen table. I see this so often, and that they're making one or more of these mistakes on a regular basis. Now, the very first one is they wait too long to take action. A lot of times, homeowners are contacting me once the home is actually just about to go into foreclosure. So, meaning that the bank is just about to take title of the home. So they've gone through, I live in a judicial sale process, so they've gone through the entire process, all the different stages, right up to the time of the bank or the lender is about to take title of the home. So that's typically up to 9 months. So for 9 months, they've basically not solved their problem or reached out to anyone to solve their problem, or they did some other things, but they waited too long to actually take action. Now, the longer that you wait to take action, the more money you lose and the less help you're going to be able to find. Because the closer it gets to the bank taking over the title, typically it means there's more fees involved that have to be paid out, which means it eats into the equity. And it also means that there's less time to actually make something happen, because when it gets close to that time frame, now it's not all about just paying out the arrears. Now the bank actually wants the entire mortgage to be paid out, which means the only way to solve it is to pay out the arrears, the fees, and the mortgage, which means that the house has to be sold. There's no other way to do it. You either have to get the full amount of the entire mortgage fees and arrears, and that's the only way that it's going to be solved. Whereas if they would have taken action earlier, they could have got away with just paying out the arrears and the fees and not had to actually pay out the entire mortgage. So a lot of times, one of the biggest mistakes people make is they wait too long to actually take action, when even an investor, is very difficult for an investor to actually help them out. Now, the second thing I see a lot from homeowners that actually contact me is they end up getting ripped off by someone claiming to be able to help them help them out with the foreclosure, stop the foreclosure, and these people actually ask them for money. So the homeowner ends up paying $1,000, $1,500, $2,000 to some company or some service that says, pay us this money and we'll help you stop the foreclosure process. And all they do is they give this similar advice as to what I give for free, meaning I educate the homeowner as to what's going to take place, what the strategies are, if there's equity there, what their solutions are, how potentially they could solve the problem. Remember, there's only one way to solve the problem, that's to pay out the arrears and the fees, but what strategies potentially they could use to solve the problem. And these companies are just ripping people off, giving them basically no help. And I see it over and over and over again. So they're preying on the stress, the misfortune, the desperation of the homeowner who's facing foreclosure. They're preying on them and taking what little money they actually do have, in hopes that, the homeowner's hoping that these people are going to be their savior. And 99.99 times out of 100, all they do is just take people's money, and they don't actually perform any services, and they just tell the homeowner that there's nothing they can do. Or if there's a lot of equity in their home, they basically will give them an offer to buy their home. So typically, they're investors, and they're just taking people's money, looking for deals. And if there's a good deal, meaning that there's a lot of equity in somebody's home, then they're coming in trying to swoop in and steal the person's home for basically next to nothing, offering them as little as possible, plus taking their $1,500 or $2,000. So a lot of people really get ripped off. I've talked to a lot of people who've paid companies that actually do this, and with no results. So that's a mistake that homeowners make on a regular basis. Now, the third thing is they bury their head in the sand and they think it's just going to go away. They wait till the very end when they're served their notice that they're actually being foreclosed on, or when they actually need to be evicted. So by then it's way too late. So they just ignore everything. They bury their head in the sand, hope it goes away, don't answer the phone, they don't answer the door, and all of a sudden one day the bailiff shows up and throws them out of the house and makes arrangements for them to come back and get their stuff. So don't make that mistake, because you're just going to end up losing money, losing time, and basically you're going to end up out of your home eventually. Now, the fourth thing is they think that the bank and the bank's lawyer is there to help them. They talk to their local banker, who tells them just to pay what they can, and they continually tell them, no, just make payments, pay whatever you can, pay whatever you can. Now, the homeowner typically will end up making payments, never really getting caught up, thinking that they're paying their mortgage, but really they're only paying the missed back payments or paying towards the arrears, but they end up missing their current payments. So they eventually are still going to get foreclosed on. Basically, the bank's strategy is try to get as much money out of the homeowner as humanly possible before they actually take over the title. So that's the fourth mistake the homeowners make, is they believe that the banks are their friends, and they just keep paying them, without actually realizing that if they don't pay it all in full, that the bank is still going to foreclose on them. So if they know that they can't pay it all in full within a very short period of time, they're better off paying nothing and taking action as to getting out of the home, selling it as soon as possible, or at least optioning it and saving the money that they do have to move on to another place, because they're going to have to do that anyway. And the fifth and final thing is they end up regretting not doing something as soon as they miss their first couple of payments. So that's the biggest mistake that homeowners make, is they always come back to me, I wish I'd known about you, when I missed my first couple payments. I wish I'd known, about the process before I actually went through it. So that's the fifth and final mistake, is they regret not doing anything, not taking action until it's way too late. So as a homeowner, don't make these 5 mistakes that so many others make. Now, remember, there's only one way to stop the foreclosure, and by taking action early on in the process, you have a number of options available to you, a number of different ways that you can solve the problem. The longer you wait, the less options that you actually have. I'm not here promoting my program. I'm just here to educate to people that potentially might be going into foreclosure, or if they know somebody's going into foreclosure, to definitely educate themselves about the process, the different types of foreclosure, the different stages, and basically pound the one and only thing in their head, that the only way to stop foreclosure is that they actually have to pay out the arrears and the fees. If they do not see a way to do that in the next 14 days, 28 days, if at the point in time when they're either missed the first couple of payments or they're served the statement of claim, if they do not see a clear exit strategy for themselves, meaning they can't come up with the money without winning the lottery, if they can't figure something out within the next 14 days, that they have to come to the conclusion that they need to get outside help. They need to find somebody that has that can help them with some strategies of either selling the home quickly, or and typically selling the home quickly means they're selling to an investor, and they're not selling it for top dollar. They're selling it at sort of a quick sale price. But in the long run, because they're selling it today quicker than they would be selling it 6 months from now, when the fees and the arrears are keep adding up, where they're holding out for that top dollar, but all the fees, the arrears, the lawyers' fees keep adding up and adding up and adding up. At the end of the day, they're netting less. They net less by waiting longer to get that top dollar. So, for them to understand that is crucial. And, for homeowners and investors to really understand this process is key. And, but that's all the time that I have for today. Thanks for joining me on Real Estate Investing Monday. I want to, for showing up, for sharing your comments, for coming along with me. So I just wanted to thank you, and hopefully you got a lot of value. Be sure to share this with your friends, any colleagues, anyone you might know who either is an investor or even if they're a homeowner. There's a lot of good information in here, especially in these troubling times when a lot of people are out of work. They potentially are things are very tight. They potentially could be missing some payments. So this is some valuable information as to the strategies, the processes, the procedures, the stages. And remember, there's only one way that you can stop a foreclosure, and that's to pay out the arrears and the fees. Nothing else works. It's just a matter of coming up with a strategy of how you're going to get that money to pay out those arrears. So stick with me I'll be right back with today's closing remarks. But I want to thank you very much for joining me on today's show, and I look forward to seeing you on tomorrow's show. But just stick with me. I have some closing remarks for today's show. Thank you. Hey, thanks for joining me on today's John A. McCabe Show. Now, being faced with foreclosure can be a very stressful time for the homeowner. Many times they just want to bury their head in the sand, hoping it'll all go away. Ultimately, that's the worst thing they could ever do. Now, if you're facing foreclosure, or you know of somebody facing foreclosure, the best advice that I can give you right now is to act now to stop the foreclosure. Many people who want to stop foreclosure do not even know where to turn when they're confronted with a pending foreclosure. They don't understand the process. They're unsure as to what's going to happen. They don't know how little time they have and how it affects the money that they're going to make or lose in the long run. Now, as a homeowner, you need to realize that things are different. The bank is not your friend. The lawyer for the bank is not your friend. They're only out there looking out for the best interests of the banks. Now, you may have a great relationship with your local loans manager. However, once that file gets kicked up to the legal department, there's nothing your local banker can do. It's really a big greedy machine looking out for their own best interests. Now, the best thing you can do as a homeowner or investor working with people going into foreclosure is to really get educated, understand the process in your area, understand the time frames, and take quick and decisive action. Now, as a homeowner, holding out for top dollar on a sale typically can leave you in trouble, since the average selling time through a realtor plus closing time can be more than your redemption period, and you're going to end up losing the majority of the money that you're holding out for in the end. Plus, the amount of stress that you put yourself under waiting for that sale to close can cause serious damage to you and your family. Now, it's important for a homeowner to understand if they can't come up with the money themselves to stop the foreclosure, then they need to realize that they're going to have to leave the home. The quicker they come to that realization and take the steps to sell or lease option their home, the better off they'll be in the long run. Now, working with someone who understands and specializes in foreclosures is important. Someone who can review your options and help you determine your best course of action. Now, many people facing foreclosure hope that they'll figure something out or a miracle will come along and we'll all be better. A lot of these people I've met with and helped are just scared. They don't know where to turn, they don't know what to expect next, and they don't know what choices or options that they may have available to them to stop the foreclosure. Now, many homeowners seek advice from their attorney, only to have to sell their home at the end while they get very little, if any, money at all, and have a nice lawyer's bill to pay as well. So get educated and take action quickly. So thanks for watching today's John A. McCabe Show. For more information about today's topic, please contact me through johnamccabe.com or contact me via the show's Facebook page. So I look forward to talking to you tomorrow. We have another great guest on talking about entrepreneurship and accelerating their authority. So please join me on tomorrow's John A. McCabe Show for some more great information. Look forward to seeing you then. Take care.